My name is Jenny Baker, and trading is as easy as you make it. Today, we're going to be talking a little bit about support and resistance, supply and demand, or what I call all of these different levels, areas of interest, right? What are they, and how do we find these key levels on a chart to be a more profitable trader, to be a withdrawing trader, to stop being a break-even trader, to get better at our options, our stocks, our crypto wallets, day trading, whatever it is you're doing long-term. The idea is to help you use these areas of interest on a chart to make better decisions in your technical analysis. Now, here's where the fun part starts. Measured moves, including Fibonacci, whole numbers, quarter points, volume, accumulation, order blocks, liquidity voids. When we really tie all this together, we get this perfect package, this perfect storm of an area of interest. Remember, we're not looking at one exact thing. That's silly. That's a horrible way to be. We're looking at a combination, a correlating kind of basket of information to say, yes, we see this. Yes, we get this. High probability, high level of accuracy. So let's go to the chart real quick. I'm going to point out a couple of measured moves, mostly my, M's and W formations, very in line with what is that, the market makers, or I forget which style that is, but either way, it's your M's and W's, your V's. You guys get the whole idea. Fibonacci, big for a lot of people, whole numbers, quarter points. Let's take a look. And then let's look at the liquidity voids and see how we tie that all together. Okay, so here we're back at the chart. I'm going to go to replay all the way back to here. Ta-da, we're back at our same old spot. Notice how we're back at our yellow line. I'm going to go ahead and keep the 200 visible for the moment being, just so we can kind of see. Obviously, we can pick any one we want. I've still got a couple of levels of support and resistance. I've still got a couple of trend lines. That's fine, we'll keep them there. Let's look for a couple of M formations. So first and foremost, I'm going to zoom in again. This right here, technically, depending on who you ask, would qualify as a potential head and shoulders. And this is slightly, not quite higher, no head and shoulders, but definitely we've got a good M formation. So for me, a measured move is literally as simple as taking the price from the center to your highest peak, right? That's 29, 22, give or take, which would make my target right in and around here. Do we hit that eventually? Absolutely. That's a form of measured move. And you can use that over and over and over again, knowing you're going to get a reaction. And we did get a reaction. We bounced up. So same thing over here. I'm going to see if I can't remove this. Lord knows it's always temperamental. Let's try this again. So here we've got a triple bottom. Let's go to the candle formation. Again, not a head and shoulders because we've got a stronger left side than center. We've definitely got a potential double bottom, triple bottom. So what do we see? I'm going to measure from the smallest of the peaks. The biggest is what? 19, 13, 14, 14. So that means from the break of that area, we're going to go for 14. I'm going to go ahead and leave that here this time. Push it all the way over here. Go back to candles. This would be a form of measured moves, right? Using that as dynamic support and resistance. So what does that look like? We break above that point. We know what our targets are, and we know we're going to get a reaction level. And what do we get? This little darn box is in the way. Wish I could move it over. There you go. We hit our target and we come back down to respect this area. So that's a form of measured moves. There's a lot of different ones with harmonics, with patterns, with all kinds of things, from breakouts to time of day to literally everything you can think of. Whole number theories use it. Elliott wave theory uses it. So many different formations, styles, strategies use some form of measured move. Fibonacci obviously is a calculated measured move, but you guys get the idea. So what else? We've got quarter points. Okay, I did a little bit of looking. I don't typically do quarter points on this particular platform, but I just went ahead and went this one just for the purpose of conversation. So quarter points we know are based off of whole numbers, and then the quarter points between those, and of course hesitation points. But let's see how these levels, these little grayed out levels, whichever ones they're using for this particular indicator, are used and or marked, just for conversation purposes. And while we do that at the same time, now I know this is getting messy, but this is all a lesson to teach your eyes to see something that is significant beyond belief. I'm talking significant enough to take you from that break-even, losing, consistently depositing trader to the kind of trader who deposits once or twice a year, you withdraw monthly, bi-weekly, you go on with your day and you buy your own freedom. So before we go and press play, let's go ahead and measure this move for Fibonacci. So I've got my Fibonacci on. You can measure from the very bottom. You can measure from the breakout and the retest. I'm going to go ahead and do the breakout and the retest. I'm going to come up to the whole of the move. So we've got our 100 to 0%. So if we come down to this level, we're at 100% retracement. Remember, this is the 1 hour time frame. You can even go a little bit higher up. You guys can get the idea. This is getting messy. I get it. I get it. But just for conversation, bear with me. So do your best to train your eyes to see these quarter points. We've got some previous support and resistance levels. Got a couple of trend lines. We've still got our 200 moving average, and now we've got Fibonacci. Let's take a look at how this looks on replay. Wow, that's ugly. Sorry for how ugly it is. So here's where we're at. Does price act as a magnet toward that quarter point? Yes. This was our 100% range. We bounced off of it. If I'm not mistaken, we do break above it. But watch how much these levels are really respected. And this is what makes all those darn YouTube videos look like, oh, this is the best indicator. This is the best strategy in the entire world. We have to use this one. This is the only one that's going to ever make us money. This is the 100% win rate. This is everything. My goal is that as you see this as a basket, none of it is everything and all of it is something. So just watching this play out a little bit, that's our 100% if I'm not mistaken. We've officially retested 100% of this move. We get a huge reaction. So if I hit pause and I get out another Fibonacci, for example, I can use the wicks. I'm not much for that, so I'll use the base. From that base, now this is ugly, I get it. How much of this whole move did we come up to retest? From the whole portion of the move, we came up to retest, what is that? Almost 38%. Almost exactly 38% of that move was retested. Look in this range right here. I'm going to go ahead and drop it. Look at, actually I think I did this wrong anyways. I had to do it. Let's delete, let's redo. Hold on. Delete. So from this move all the way, I'm going to measure it down. There we go, to here. How much of this move was retested from all? If it would just drop for me, come on. Please drop for me. One more time. Maybe, baby. Got it. So from this move, how much came up to get retested? Almost 61.8, almost exactly 61.8 is how much of this move was retested. So first this move was retested 100%. This move was retested to the 61.8. Beautiful. We can keep this going time and time again. Let's go ahead and take off the Fibonacci because it's a little ugly in the background, so we can at least focus on quarter points per minute. We've already shown that twice. Let's keep this playing just for a minute. Those are quarter point key levels. Watch how these levels are being interacted with over and over again. The blessing with quarter points and whole numbers is it's the only part of the prediction part of the future that really is going to be significant. But check this out. We've got a reaction. Price stalled here. Price stalled here. Price stalled here. Over and over again. Over and over and over again. It's kind of a beautiful way to be. I'm going to go ahead and zoom in so we can see a little bit clearer now. You guys get the idea. Nice level that we drew. That was our support and resistance. All being respected. We broke through, retested, broke through, retested. We stayed there. We broke above. We're coming up. Going to at least kiss our previous level. Oh, maybe not. We're just watching. And now we kiss that level. Ta-da! It really is a beautiful thing to see how this plays out over and over and over again. Don't let the world complicate it. Don't let all the definitions and people making up their own terminology overcomplicate it. All you're looking for are areas of interest where decisions might be made, where volume might be sitting, where you know there's a high probability of a reaction in that area, and you're using those areas of interest as potential rejection zones. You're using those areas of interest as potential targets, as potential decision-making areas, looking to your strategy as a reason to make an entry. And that's it. I hope that this has helped you a little bit. If you find this information helpful, make sure you like, comment, subscribe, and all the stuff that YouTube finds friendly. Have a great day. Take care, and God bless.